Hey, best ever listeners. Welcome to the best ever CRE show. This is Beyond Multifamily. I'm Amanda Cruz, joined with Ash Patel. Hey, Ash.
Hey, Amanda, how are you?
I'm doing well. How are you doing today?
Good. And hello, best ever listeners.
I am happy to be here, Ash. You know what I was wanting to ask you? Are you guys
Uh-oh.
using AI in your business?
We use it extensively, but not for so much searching for deals, more for doing tasks, right? I think you heard this story. I invested in a bar where I know our operators are stealing from us. So I came in kind of late into this investment. Um, I know the operators are stealing from us. So we got their bank records and I had ChatGPT go through like 2 years of bank records and say, hey, ChatGPT, I own a bar. I think these guys are stealing from me. Can you show me frivolous charges? It would have taken us hours to go through all these. In seconds, it pulled up all the frivolous charges and saved us a lot of time, right? Um, we've done a lot of parsing of financial statements with ChatGPT. We do a lot of research on different locations. So, hey, I'm looking at investing in Canton, Ohio. What can you tell me about this building, about the area, growth, any new jobs coming in? So we use it for things that would have taken a lot of time and effort and that were manual processes. How about you?
Yeah, I love that. I like the frivolous charges and sort of like, hey, go see what you can find. That's awesome. We are using it. So I personally, I write a newsletter every other week and I do blog posts and I've started using it to make what I say sound better because by no means am I a good writer. So I'll write something and then say like, how can this be tweaked basically to sound better? So I've definitely used it there. My assistant, when I do social stuff, I post on LinkedIn as my original content. And then I have my assistant just take it and put it on Instagram or wherever. And she's been using it a lot to create reels for us, which I like. I did create my first custom GPT recently, which was really cool. Because one of the things that's annoying to me about, I use mostly Chat GPT is like the memory, the history, and trying to really, really understand our business. Well, it turns out that that's exactly what custom GPTs are for. So I was a little bit just behind the eight ball in that. And so I actually used it as a trip planner, like gave all the info about our family and what we like and how old our kids are, what we don't like and where we like to go and how we prefer to travel and all the things. And it's really useful. So now I can just
Good.
say, hey, we're thinking of going to Glacier National Park. What does that look like? And it plans like the whole thing.
So you don't
And
get
so,
blamed if you stayed a bad place or mom, why'd you plan this? Amanda, why'd you plan this?
well, I'm the most bougie traveler of our family, so I would just be in hell if we
All right.
if we stayed somewhere terrible. But I definitely see a lot more opportunity to use that for tasking in our business with these custom kind of people, if you will.
So even the normal ChatGPT, if you're not using a custom one, you can ask it, tell me what you know about me. And it's shocking how much it knows about you, right? There's another one called projects. So if you work on something like, let's say it's deal searching, um, you can create a project and ask all of your questions under there and always go back to that. So it keeps a full history of that.
Good to know. All right. Well, I guess hopefully we all learned a little bit today on AI. We have an awesome guest today, Sean Graham. He is joining us from Detroit, Michigan. I don't know what he knows about AI. We'll have to ask him, but he's the founder of Maven Cost Segregation Tax Advisors. They focus exclusively on delivering detailed engineering-based cost seg studies for real estate investors, syndicators, and developers. And Sean's also an active real estate owner. His portfolio consists of 4 self-storage facilities, totaling 140,000 square feet of storage with 1,000 units. Let's
So
bring Sean in.
he's a cost seg guy that bought self storage. Do you get a lot
Super
of
interesting, right?
Yeah, do you get a lot of cost seg and self storage? I don't think so. Or is it
Also,
one
it's
of
not
those things
passive.
that,
I want to ask him about
all
that.
right, let's dive into
Let's
it.
bring him in. Sean Graham, welcome to the Best Ever Show. How are you doing today?
I'm doing great. Thanks for having me on, Amanda and Nash. Appreciate it.
Yeah, Sean, Amanda and I were talking about you before you joined. You are a cost segregation expert, but your personal investing is in self storage. Why is that?
Oh, I think because it's the easiest thing, like from an operation standpoint. So I went from residential, then went into I wanted to get into commercial. So it's like, well, what do you get into in commercial? Multifamily's like very popular, but there's so many, I guess, potential headaches and issues. Like to me, it's like a way more complicated thing. Like I currently manage a small residential portfolio myself, just like small multifamily. But with self storage, like no one's living there. At the end of the day, no one's living there. I can operate it remotely. I don't have to be on site. I can manage everything. It's really a simple business model, right? There's nothing overly complex about self storage.
Dude, Sean, that's not passive at all. You have to manage it. You have to kick tenants out. You have like 1,000 tenants. This doesn't sound passive. Why are you not buying warehouses, man?
You might have a good point there. Yeah, I wouldn't say it's passive, right? I definitely wouldn't say it's passive, but I think you have a lot of operational control. So I mean, right, the value of your facility is worth it's the cap rate combined with your profit, right? And so we can't control cap rates, can't control interest rates, can't control the market, but I do have a lot of control over operations. So everybody's on a month to month lease. So if we're hitting our occupancy numbers that we want to be at statistically, well, I can raise rents the next month, or I can give them a 60-day notice to raise rents, right? Like the following month. Or if vacancy is high and we need to get people in, well, then I can drop rates as well. So there's a lot of control. I wouldn't say it's passive by any means. I mean, there's a lot of things you can outsource. However, I also find a lot of value with bringing the operations in-house and doing everything yourself, building out the teams, having the call center, having the property management, like doing it all in-house. You learn a lot more, and you also get the ability to grow, quite a bit and really learn the business.
Sean, the current state of self storage, it seems like it's been overbuilt in a lot of markets. Are you getting affected by that?
For sure. I think you bring up a really good point. So, I was talking to a short-term rental guy the other day, and he said, we only invest where they have rules for short-term rentals in terms of like what you can and cannot build. And that hit me hard because I think the same thing applies to self-storage, right? So I have one facility. It's in northern Michigan. It's more of in a tertiary market. It's it's not too big, but we have, let's just say, 150 units there, right? And the facility was always full. It was like 90% plus occupied. I could raise rents. I had a lot of control over it. And all of a sudden, in the past couple of years, there's like 2 or 3 facilities that have been built within the same 5-mile radius. So that has a big impact on us. So if you're going into self-storage, I'd highly recommend understanding the zoning codes and rules, not only like in your town, your municipality, but in the surrounding ones as well. Because that's a good example right there of where we're getting hurt, and there's not a lot we can do about that.
And you hit the nail on the head when we started this conversation. You got into self-storage because it's easy. That's what everyone thinks, right? So everybody, there's lower barriers to entry for self-storage. It's the same reason everybody's getting into short-term rentals. Like it seems like a pretty low barrier to entry. Knowing what you know now, are you still pursuing self-storage, or are you looking at pivoting into other asset classes?
No, that's a great question. So I have not been actively acquiring. My full focus is on stabilizing my existing portfolio and maximizing the value of it. I think it's a really tough market right now to buy with where cap rates are, where interest rates are. And the spread just isn't there exactly, like for what I'm looking for. So, like I said, I run a cost segregation firm. That is my full focus, every day. On the real estate side, my focus is just maximizing and stabilizing my portfolio. But no, I'm not looking to acquire anymore. I originally it was just acquisitions. and then it went from acquisitions to development, right? But then a lot of the areas you want to develop in, like in the South, let's just say Florida, we're looking at that. And then hurricane hits and insurance rates are just through the roof. And you can't afford it to do it there. It doesn't make sense. So the way I look at my time is like, where's my time the highest and best use of my time? Where should it be spent? And I think the trouble right now is to operate the self-storage facilities that I would like to own and operate, meaning like 50,000 square feet plus. Well, I'm competing with bigger players, right? I'm competing with like the regional players or even the REITs, publicly traded companies, right? Like that's who you have to compete with. Now, I still think there is a lot of opportunity for small self-storage, meaning less than 50,000 square feet. There's still a lot of opportunity out there.
Yeah, you mentioned multifamily. That sucks too. Talk about the level of competition that you have from institutions to regional players to even people that own several units in one town that have those broker relationships. So
Yeah.
I would avoid, and this is for all the best ever listeners, I would avoid multifamily altogether.
Sean, it's really interesting to me. So obviously your focus, you just stated, is on your cost segregation firm, right? You want to spend as little time on your real estate as possible and just keep that going. That makes a ton of sense. I'm sure it generates a heck of a lot more cash flow than your self-storage facilities. So what does your business look like on the self-storage side that gets you sort of out of the day-to-day? How have you structured that?
Yeah, great question, Amanda. So I have at every single facility, I have boots on the ground, meaning a reliable source or team that I can do the physical operational work on a weekly basis. So that's the very base level of my operations. Above that, I have a property manager. So a property manager is on my team. He works directly for me. He is managing the boots on the ground for all these facilities. So what does that mean? It means he knows which units need to be overlocked, which ones need to be unlocked, who's late, who's up for auction, who we need to go take pictures of to go post the auctions. He's tracking all of that. So he understands the intricacies of the facility down to like a unit level and who the customer base is. Outside of that, we have a call center. The call center is in-house as well. And so they're handling the day-to-day calls. Now, you can have overlap with these two roles, right? Like my property manager acts as a backup to the call center, but the call center is the one who's selling, right? And so for a while, and I'm not against property managers, right? Property managers are fantastic, but you have to have the right one, and they have to truly understand your facility. There's a lot of property management companies out there or call centers out there, right, who are managing just dozens of facilities and their teams are like really big. Well, depending on the level of service that you need, or if you're, let's just say like I have a new build in Ohio. It was over the last couple of years, we did a large expansion. And so it's like that one's tough because there's a lot of inbound calls, and like there was a point in time where you could just answer the phone, you just rent it, right? But like we need the operations or somebody who just has that self-storage facility. So I have one call center, and that's managing the portfolio right now. All calls go there, and it's just a very small team. So they really know my units, they know my facilities, and they're not outsourcing. I mean, like we're not doing it for other facilities. We're just doing it for our facilities.
Love this. And now I obviously have more questions on it.
Sure.
How many people do you have? Where are they located? How much do you pay them?
Oh, great questions. So my businesses overlap quite a bit, and there's different people who work for me in different areas. So it's hard to break it down, but I probably have a team of about 10 people, and they work for me all over the world. So I use a lot of overseas talent. I go and I recruit and I resource. I do that, get that talent myself. Meaning like our team, we get it internally. So we don't use a third party right now for outsourcing it. but it's all in-house, an in-house team, and there's probably 10 people. So I've got people from Egypt, I have people from South Africa, people from the Philippines, people from India, and then people here in the US as well.
How much do you end up paying them? Yeah.
I would say the overseas people average salary is somewhere, around $1,200 a month, I'd say, on average.
Is that full time?
Full time.
Yeah, that's pretty good. And best ever listeners, we also have a virtual full-time assistant. I think she runs around $800 a month. And Sean is spot on here. Don't go through those placement companies. They're taking this overhead and you're not getting any better quality. They're not vetting very well at all. It's better to just go source them yourselves. You're going to save the money. It takes more time up front, but then you find much better people and they last longer on your team.
Yeah, and I'm not against it. In fact, I had an overseas, recruitment company, but what I found was that like my time is much better spent using like global talent to build my own operations, build my own businesses than it is fulfilling other people's businesses. So on a small scale, right? Like if you just need certain tasks done in, we're talking like 10 hours a week type of thing, well, just go to Upwork, go to Fiverr, go find somebody on there. If you need somebody like 20 to 40 hours a week, well, you have the options of going to a recruitment company, paying a fee to hire that person, right? Which is how we used to run, or you're going to pay an upcharge to like go month to month, or you can go through and do the work yourself. And so you go do the work yourself, you go post on LinkedIn, you go post on job boards all over the world, and then you go through the vetting process and the recruiting process. It's a lot more work. So in the very beginning, I would actually, I did use other companies before I built out my own, but our team has gotten so good at sourcing and recruiting talent that we're able to fill all kinds of positions throughout my companies now globally. And I said my average pay is around $1,200. It doesn't have to be $1,200, right? And so I say that because I have people on my team who are making, closer to $2,000. I've got people who are making more of that $800, but it's a skill set. So it's just like any person, right? You keep reinvesting in that person and you want that person to come back and to stay and to work with you and give them opportunity to grow. So like, to me, I will gladly keep increasing somebody's pay and salary and pay them because they grow, because I'm investing in them. So for example, one of my original team members, she's an accountant and she worked for a big four accounting firm. She works overseas. She's from the Philippines. She's fantastic. But her skill set in the very beginning when we started is completely different than it is 4 years later, right? And like what she can do now. So in the beginning, she didn't know anything about real estate, but she had the foundation. Now she can underwrite deals. She manages all the QuickBooks. She can do not only just like historical accounting, but she can do forecasting. She can do budgeting. She can underwrite things. She can really lay the foundation for me. And it's no different than having somebody here US side as like a financial analyst or an accountant. I've gotten good at being able to use overseas talent. And so I'm not against US talent. I think both sides are great, but when you're an entrepreneur and you're starting out, it's really good to use people from around the world. And there's things that I wouldn't have been able to scale to the degree I have scaled without using a worldwide team, if that makes sense.
Heck yeah. I really like that. I like how you treat your employees, no matter where they are, like real employees, and give feedback and raises over time and stuff like that. We do the same thing. And I think it makes a world of difference with retention and how they come to work every day, really feeling like they're part of the team.
Absolutely.
One thing we struggle with that you may have a better answer to is like, okay, well, we have our overseas team and then we have our boots on the ground people. And like, how do you get them talking to each other well?
Well, I think consistency is one thing, right? So my property manager on my facilities, like he has been the key guy now for the last couple of years. Before him, it was somebody else, but they develop a rhythm. I think, you have to have, here's what I've learned is you can systematize anything and everything and have the perfect checklist and try to catch all the errors. But at the end of the day, it just comes down to the person. So all the checklists in the world are great, hypothetically, but like if they're not being used or you don't actually have somebody in that role who's a thinker who can critically think, then they don't do you any good. So in the beginning, I think I would take a lot of that blame and put it on myself of like, hey, well, I'm not doing a good enough job training this person, or we didn't have systems in place to catch that error. But after a while, you realize, okay, if you invest in a higher, like you're going for quality. You're not going for the cheapest option, but you're going for quality. And this comes to talent, I think, anywhere, no matter who you're hiring. Well, then you start to get people who can think critically, who can make decisions, and that you start building their skill set as well, right? And then you start really trusting them. So for us, we use Google Voice for everything, meaning on a weekly basis. For self-storage, our property management, we use different softwares. We use StoreEdge for a couple facilities. We use Cubby Storage for a couple facilities. But we have the tracking internally, all notes in there, who's in what unit, their status, their pay status, are they locked, overlocked, are they going up for auction, all of that. My property manager takes this information and relays it to the boots on the ground on a weekly basis. So a lot of times boots on the ground, right? It's like a landscaper. It's like, okay, like he doesn't really care about email. He just lives off of his phone, right? And like texting is the best. Like we use Google Voice. We text and we say, hey, please overlock these 10 units. Please unlock these 10 units and like take a picture of this unit because we need to auction it, right? And he's able to do that. And he takes a picture of every unit after the work is done so that we have verification, we have proof, and then we can go update the system accordingly. And I think that that works really well. So Google Voice would be the short answer in terms of like text communication for us.
Sean, you people used to be rock stars like 3 years ago when cost seg was 100%. Is there any bill on the floor, any sign of 100% cost seg coming back?
It's coming back, Ash. I promise. No, yes, I think it's highly, highly likely. I think the new administration, they want 100% bonus depreciation. So politics are an interesting thing, right? Like I won't get into politics too much, but let's just say both parties are for 100% bonus depreciation. I think they're both like they have real estate investors in both of them. So there was a proposal before the election to bring back 100% bonus depreciation, but it didn't go through. Why didn't it go through? Well, probably because there's a lot of other things in it, but also because they didn't want to make any moves before a presidential election. So now that the election's over, the same party runs the administration and also controls Congress, right? So something will happen. Trump has already said that his objective is to bring back 100% bonus depreciation for anything that was acquired in 2025. So right now, 2025, without any changes, we're at 40% bonus depreciation. What does that mean? It means, okay, if you have a building and you break it down, right, as opposed to everything going towards 39-year life for commercial real estate or a 27.5-year life, just straight line depreciation for residential, we do a cost seg study and we break it down into different components. We say, okay, well, this stuff can go to 15 years, this can go to 7 years, this can go to 5 years. And a big portion of this, really anything that's less than 20 years, we can just bonus out in year one. The bonus depreciation right now for 2025 is 40%. However, I would expect it to retroactively go in. By the time you're filing 2025 taxes, they'll know that it's 100%. So I wouldn't hesitate in terms of like buying anything or delay closing anything for 2025. I'd go ahead and I would buy. And there's a good chance that you'll get 100% bonus depreciation. Not a guarantee, but a pretty good chance.
Somebody that's, let's say, November, December, and they have a huge tax consequence coming up, what's your recommendation to them? Is there any quick fixes besides buying real estate for bonus depreciation?
There are. So, I'm a CPA registered in the state of Michigan. However, I only focus on on cost segregation. That's my specialty, right? So what we focus on mostly is helping people use depreciation losses to offset their gains and really lower their taxable income. To me, I think the biggest enemy of any high income earner or somebody trying to build wealth is taxes, right? And so how do you avoid taxes? Our specialty is cost segregation specifically. Now, I think tax strategy is something that is highly useful, and it's really underutilized. And what I mean is there's a lot of planning, right? So maybe, first of all, like bonus depreciation is based on your in-service date. Your in-service date is determined by when the property was available for rent and when you actively started renting it. So if you started renting it December 15th, or let's just say you started marketing it December 15th, somebody could have moved into it December 15th. Well, then your in-service date, right, would be December 15th. But let's just say you start marketing December 15th, but no one can move into it until January 1st. Your in-service date is January 1st. So I would say timing, you want to utilize the depreciation losses. And so when will they be most effective for you? If you have large gains, capital gains, or you're selling a business and you can qualify for ways to utilize depreciation to offset those gains. In other words, let's just say you're a real estate professional, qualify for real estate professional status. You have all these capital gains because you sold a piece of real estate. Or let's just say like you have a business and your business did super well. Well, if you buy real estate and you place it in service in the current year, you're going to be able to utilize those depreciation losses to offset those gains. You'll be able to offset active gains. If you're a real estate professional, you can use it to offset W-2 earned income, right? Which is fantastic. But if you already have losses right now, but you expect to have a lot of gains the following year, well, then you might want to, if you have that option, right? Like maybe it's better to place the service place it in service the following year. Now, at the same time, you don't lose these losses, right? Like the losses that you have, they roll forward and they roll into the next year. I think the key is to get the losses, try to get most of the losses when you are a real estate professional, or when you can get them in a way that allows it to offset active income. So short-term rental loopholes one way, real estate professional status is another way. Maybe you just buy for your active business. Like those are all active losses, and you can utilize them to offset things other than just passive activity.
Yeah, so I'm selfishly asking this for me. Last year, I had a big tax consequence, and of course, I wait till November, December to figure this out and actually do something about it. So we're down to the wire. I ended up having a friend who owns a large company. He was buying a half dozen semi trucks. So he's like, hey, listen, you could buy them and rent them back to me. I ended up doing that. It helped significantly. But is there any other quick fix like that for people that wait to the last minute?
It's tough. I mean, the strategy you just said is great, right? Do you know why you're able to use that? Like, do you know the technicalities behind that from?
If I do, it's probably wrong. So let's hear it.
Okay. So, well, this reminded me of a similar example. Somebody was talking about this recently, and they bought equipment, like we're just talking about construction equipment, right? Ran the business. They bought the construction equipment to lease it out. Well, equipment is 7-year life, meaning it can be accelerated, and you can use it. It's eligible for bonus depreciation. So if you do this, and let's just say we do this in 2025, bonus depreciation comes back 100%. Well, all equipment that you bought, and you have to do it correctly. There's going to be rules. There's material participation rules, things like that. But you can use the equipment to offset your gains, which is fantastic. So it sounds like, I don't know the details of it, but it sounds like you're able to do something like that with the semi-trucks. The same concept, right?
Yes, it helps significantly. Here's another question, Sean. Amanda and I have been to a lot of real estate conferences. Yep. We've been doing this for a long time, and we've met a lot of people in the cost seg industry. You guys are the nicest people ever. But for the most part, I think we stick to whoever we started using in the beginning. I've heard a lot of arguments on, hey, this is why you should use me. This is why you should use me. We've never had, or when we have an audit, we stand behind them. We've never had a loss against the IRS. I feel like a lot of you guys and girls are the same. What differentiates you and Maven Cost Segregation?
Yeah, I think that's a great question. So one, I don't talk bad about anybody, so I'm not going to sit here and bash any other cost seg firm. I think there's a lot of good cost segregation firms in the industry. The angle that I take is that I am also a real estate investor. And so like I understand both sides of the coin, meaning my background's in tax and accounting and as a CPA. And so I've been on that side. I've also gone into real estate full time at one point, right? And it's just investing in real estate. And so I understand like what the goals and objectives are there. I have Maven Cost Segregation to merge those two worlds, right? So I focused on two things, like two main things, I should say. One is communication. So I pride ourselves on communication. It's answering these questions before they are asked, right? So status updates, where we're at, communicating with the clients before they come to us and they're wondering what's going on. The second one is quality. And so we really focus on quality and knowing and understanding what the IRS is looking for, and doing things the right way. So what I mean by that is like I think a cost segregation really comes down to who is going to spend the most time to granularly go through the property and pull out every component possible to accelerate as much as you can and get most of the losses, right? And so that's just a matter of time of going through the property and really diligently doing it on a component by component basis. We do that. We also pride ourselves on doing things in a legal and compliant way. And so what I mean is there's a lot of things that, let's just say, people will sometimes push, but if it really came down to an audit, you're not going to win that, right? Because it explicitly states and it says, hey, you can't actually do this. You can't accelerate the depreciation here, but people will try to do that, right? And so I sell by trying to add value to people, to help them to actually utilize their depreciation losses to lower their taxable income. I'm not here to sell you by saying, hey, I promise you the very most amount of depreciation possible. Say like, look, no, like this is our most accurate estimate right here. And we're going to do everything in our power to exceed that estimate. And they'll come back sometimes, they'll say, well, like, why is this firm over here? They say, okay, well, this time is giving me way more. And it's like, I think sometimes people will really push cost segregation sales by just promising them the moon and the stars, when realistically, like it's either not compliant or it's not accurate, and they're going to come back and underperform based on their estimate. So yeah, we pride ourselves on doing things the right way.
That was a pretty compelling argument. You're a real estate investor and a CPA. And while you were talking, I looked at all the other cost seg people that I know on LinkedIn. None of them are either. So pretty compelling.
There you go.
Hey, Sean, you mentioned audit protection. I know a lot of cost seg firms like to talk about audit protection. What does that actually look like? If the IRS comes back and audits me, what happens and how do you protect me?
So I think the first step is having a report that's done correctly. The IRS put out a guide that specifically states what a quality report is. So one, are you getting a quality report? Meaning, are you doing detailed engineering work, right? Are you following the steps that the IRS needs and wants for a quality report? And is that information contained in the report? I would say the report itself is by far everything that the IRS really needs. Now, if the IRS agent has questions specifically on the report, right? The report doesn't actually answer what they need. Well, we don't have any, at least up to this date, right? We've never put a limit on the time limit on how much IRS audit support we'll have. So any questions that they have, in terms of what it is, like we have everything. We have the pictures, we have the measurements, we have the quantities, we use what's called RS means, which is the IRS preferred method for backing or for getting the detailed information for all of these components. And we have it all right there. So essentially, it means that if the IRS has any questions, if the agent has any questions, that we're here to support and answer anything, and make sure that the report holds.
Sean, I like to push. So if you were doing a cost seg study, and listen, I'm from Jersey, right? We're going to take everything we can get. So if I wanted you to push things a little bit further, what's your response? Are you, you can't do it. It's illegal. Not illegal. It's gray area.
Yeah.
But I insist, listen, I need the depreciation. How do we have that conversation? How does that turn out?
So let's just say, here, I'll give you an example, Ash. Kitchen cabinets are a very specific thing within multifamily that everyone pushes, or traditionally, historically, has pushed towards bonus depreciation, towards 5-year life. Now, the IRS has specifically come out and stated, right, that the cabinets, kitchen cabinets, they're 39-year life. They're part of the structure, meaning like, hey, if you have a rental property or you have a multifamily, you can't take out the kitchen cabinets and for it to still like function. Like you still need the kitchen cabinets as part of it, right? I think the flip side to that argument is that like it's not a structural component, right? Like it can be removed. And so I think there's a very good case for saying like kitchen cabinets should be accelerated. They should go into 5-year life, but the IRS has said otherwise. So if you said to me, Ash, like, hey, look, I want to take a more aggressive stance and I want to push the kitchen cabinets towards, 5-year life and accelerate the depreciation. Well, we can do that, but you would have to sign off on that, right? Specifically.
Yeah, let's go.
Knowing that like, if it came down to it, I would not be able to support. In fact, I have to recommend that the kitchen cabinets, they would not be supported because they're actually not 5-year life, right?
Yeah.
So I would advise against it. Honestly, like I'd advise I like to push the more conservative route, but if you really wanted to push something like that, it's just that you would have to take the accountability for it in terms of like if you'd have to take that risk on because we couldn't.
I'm good with that. One, I don't do multifamily, so I don't worry about kitchen cabinets. But what happens in that situation? How often does the IRS actually come back and say, "Oh, you put kitchen cabinets not allowed"? One, how often do they do that? Two, what's the penalty?
Well, now their staff's all gone, so I don't think anybody's worried about it right now.
Hey, they got rid of 70,000 IRS people. I think we're good for a minute.
Amanda has a very good point. Yes, there's no one left. So, look, I think it just comes down to a risk tolerance thing, right? Like, if you have, for us, from my standpoint, if you've got the one IRS agent who all of a sudden says, "Oh, well, like Maven's doing things incorrectly here," I see this as an opportunity to grow, and so now I'm going to try to connect it and go after every single cost segregation report that you've put out because I know you've done it the incorrect way. I don't want that, right? Like that's the last thing I need or I want. And sure, like, some people might be willing to do that and win short term, but over the long term, they're not, it's not a win, right? Now, on the other side, I would be willing to bet that the kitchen cabinets specifically end up going to court again. And the courts determine that they can be accelerated, right? And it's part of the 5-year life. So there's a good chance that like that's overturned or that's changed, but it's not a guarantee. There is no court case right now, but somebody's going to take that on at some point, and they're either going to win or they're going to lose. But I think from the IRS's standpoint, right, like one, if you get audited, it's probably a random audit, or it's because your tax CPA or yourself, you did something incorrectly in terms of your filing. You're not going to get audited because you are a real estate professional, unless you're working a full-time job, right? Then you're going to get audited. But you're, just because you're a real estate professional or because you did a cost segregation study, like that's not going to trigger an audit. Like these things are common, these things are compliant, and they're done the right way. But if you do get audited, then okay, then that's where that comes down to. But I think if I'm an IRS agent, like I'm focusing on like the big ticket items, meaning like the 80-20. And so I'm focusing on that top 20% that's creating 80% of our value. I'm not worried about, the small little guy with maybe a few self-storage facilities or single family, rental portfolio. I'm focused on like the large commercial real estate syndicators or partnerships or big, high net worth individuals.
Yeah, I've been through 2 audits, and in my opinion, the biggest thing the IRS is after is people hiding revenue.
Yep.
And I've never even thought about doing that, right? Like, had plenty of tenants that pay me in cash. Everything gets recorded. And best ever listeners, play all the games you want with your books and IRS. Don't try to hide revenue. I mean, that's fraud. You're getting screwed on that. But expenses is always a gray area. So back to the question is, what's the penalty if we push too far? We as you and I, you're coming with
they're
me.
going to charge you interest, right?
Okay.
There's going to be a penalty. I don't know the penalties. I don't know exactly what the penalty would be.
Probably less than the bank charges. Osh, this sounds like a good business plan.
Well,
probably less. That's so funny.
Look, you try to argue your case about the kitchen cabinets. Oh, my bad. Okay, we'll fix this. Yep. Pay some interest. Cool. Maybe a little penalty. As long as it's a little penalty. And I'm sure it then gives them carte blanche to open up all your books and do a full-blown audit. Cool.
Yep. I don't know. I'm just looking it up right now. I don't know exactly what the IRS penalties are. Honestly, I don't know what they are. And I think it's going to be like, here. So I just looked up some. So you have negligence penalty. That's 20% of the underpayment. Substantial understatement penalty, 20% of the understatement. They go on and on. There's going to be all different penalties for what they determine that you violated. But like you said, like if you truly know and understand the rules of real estate and the IRS, because the IRS incentivizes you to keep investing in real estate. They want you to do that. So either you know the rules very well yourself, or you work with a CPA who knows and understands real estate, or a tax strategist who truly knows and understands real estate. Well, then you're going to do things the right way, and you're going to have more than enough losses to offset your income. I'd say the point when you don't have losses is like when you're saying, okay, I'm just going to exit my portfolio. I'm not investing in any more real estate. As you have all this depreciation recapture, you have these capital gains, and you don't have anything else to offset it, right? And so as long as you keep playing the game, and you keep investing in real estate, right? Like you're going to have ways to offset your income completely and keep kicking the can down the road indefinitely and potentially forever. And your heirs can inherit the property and they get a clean slate, a reset in basis. So I would say work with the right people.
Nobody wants that headache. I don't need the IRS coming and asking me questions about my cost segs.
So I'll share that story. It was a summer weekend. We had just gotten to this lake. I go to check the mail and IRS letter. Heart starts beating faster and faster, right? I open it and it says, we're doing a cursory audit. Like, what does that mean? Is that it sounds like I'm getting audited. I share this letter with my wife and she's like, yep, sounds like you're getting audited. I call my cousin who, had been through audits before. And he's like, gosh, listen, this is a good thing. If you're not getting audited every 3 to 5 years, you're not writing off enough. And I'm like, dude, this is not helping. Like, I'm shaking right now. And he's like, don't worry about it. I'll walk you through the process. So I'm going to go down this rabbit hole and share the story. But the guy tells me to wait. My cousin's like, hey, just give it to your accountant. He'll figure it out. My accountant doesn't respond. We have 30 days to respond to that initial letter. On the 29th day, I called this IRS lady and she's as nice as can be, right? Oh, hey, this is just a cursory audit. there's a YouTube video just to show you what the process involves. And we just want to ask you for a few things, blah, blah, blah. And made it seem like it's just so nonchalant. And she says, where would you like to meet? And I'm like, I don't know. What are the options? She's like, well, why don't we just meet at your house? And I'm like, hell, like if you knock on my door, what makes you think I'm going to let you in? So she gets pissed off all of a sudden. And she's like, hey, so you claim a home office, I'm coming to your house. And I'm like, slow down. Like I've never in my life claimed a home office because it's one of those things that trigger an audit, right?
Sure.
So she's like, we'll see about that. Spends a minute on hold, whatever, comes back. You could see the life just got taken out of her. She's like, fine, where would you like to meet? And I said, at this rate, how about my accountant's office? She's like, you have representation? I said, yeah. Well, then I can't even talk to you. Okay, well, then why are we talk to my accountant? And my accountant calls me back literally like an hour after this. And he's like, hey, I'm calling about your audit letter. And I'm like, bro, where have you been? Like, I've been calling you, emailing you. I said, I just got off the phone with her. He's like, don't tell me you talked to her. I'm like, yeah, she's all pissed off. He's like, oh my God. Like, he was pissed at me for calling me on the 29th day, right? But the audit was intense. I mean, they asked for everything and ended up with a zero deficiency audit. And I think what helped was the government had a shutdown there for a while and the IRS got really backed up. So there was like 8 months we never heard from this lady. And all of a sudden we get a letter saying, hey, if you're good with a zero deficiency audit and you promise not to come back and reclaw anything on us, I'm good. I'm like, yeah, perfect. So, but I mean, we went through months and months of records requests and every little deposit that you've ever made into your bank, they want records of. It's an experience.
Yeah, I think the cursory audit is more surface level, and then it sounds like it went into a full blown audit after that.
It's the same bullshit they always use. So they ask you for a mileage log, they ask you for a handful of receipts, and a few things, right? And if you produce all of them, you're usually pretty good. But again, like who has every single receipt? So that's what they got me on. And ultimately, she said that my meals and entertainment were through the roof for a real estate investor. Like you're the 99th percentile on meals and entertainment. And we had to explain, like, look, we raise capital, we network with brokers, we do meetups. We're not a normal real estate investor. She didn't care. I mean, they want to find the smoking gun. And again, the first thing they're after is revenue, right? Like if they catch you, not claiming all the income that you've gotten, it turns into a whole different ballgame. Expenses, look, we can go back and forth and argue all day long. I had a $1.25 McDonald's receipt. My accountant calls me and yells at me and he's like, hey, who the hell did you buy McDonald's for $1.25? Nobody. He's like, it was you. I'm like, I don't know. Maybe I bought, a contractor a coffee. How do you know it's me? So again, there's that whole gray area you can go back and forth on.
Yep.
But not claiming revenue. Please, best ever listeners, do not do that. I don't care if your tenants pay you in cash. Claim all your revenue.
And document, right?
And document,
documentation's
and keep every receipt, obviously. Bunch of bullshit, but
hey, but you're in the clear. You're good.
Yeah. My accountant said, if you get audited and you pass, you're good for 7 years. So the next year I'm like, let's go. We're going big this year. 2 years later, hilarious. I get audited again. And this was some schlup that must have been new, didn't even know what he was doing, continued to ask the same questions. My accountant bitched him out and he just disappeared. Nothing happened.
It's funny.
Sean, if the best ever listeners want to get a hold of you, what's the best way?
So I created a link for your listeners. So if they go to mavencostseg.com/best ever, then there'll be a discount in there, any listeners. But submit your information, your property info, and we will, we'll get you an estimate out right away. I'll give you my calendar link, but my email is Sean, SEAN, at mavencostseg.com. So Maven spelled Maven. And I'll share my calendar link. Happy to chat with you and go from there.
Heck yeah. Come in with the link. I like that, Sean.
Yeah,
If you could
thank
add
you
it to
for
the
that.
show notes, that'd be great.
Heck
It might
yeah.
not be
Yes,
activated yet, but I'll have it
Oh, it is.
activated after the show.
It's activated. I just
Cool.
went there.
Great.
Hey, best ever listeners, again, it's mavencostseg.com/best ever. Sean, thank you for doing that. Thanks for your time as well, man. You've got a unique skill set. Thanks for sharing that with us.
It was fun. Ash, Amanda, thank you for having me on. Anybody who wants to talk real estate or talk taxes, cost segregation, happy to talk to you guys.
Best ever listeners, thank you for joining us today. If you enjoyed this episode, make sure you leave us a 5-star review and share it with somebody who could find it useful. Please also follow, subscribe, and have a best ever day.